Hello, my name is Jacques Steenkamp. I'm the CEO of EAACC. We are accountants and business advisors, and we're also the guys behind TaxDash. TaxDash is like an advanced personal tax planning tool. And we also use this to process our clients' personal tax returns. So we use it to collect information, etc. So today I want to just quickly talk to you about where I find a lot of confusion with a lot of people. And it's specifically for people who's not living in the UK, so they're tax resident in another country, and they're renting out buy-to-let properties in the UK. So they're receiving rental income in the UK. So these guys need to do a tax return in the UK. And what I'm specifically want to talk about is claiming the personal tax-free allowance in the UK. Now, if you are a UK tax resident, you're automatically entitled to the 12,570 personal tax-free allowance. But when you're non-resident, it gets a little bit more complicated. You've got options, but it really depends on your personal circumstances. So firstly, from the dashboard, if you just go to our tax return section and you go to the residency section, if you go and select that you are not a tax resident in the UK, then you will see there's a question here. Do you want to claim personal tax-free allowance on your UK income? And if you say yes there, it's going to list the conditions which you need to comply with to be able to claim the personal tax-free in the UK. So it's firstly very important that you go and read through that and see which country you're tax resident and if you can tick those boxes or one of those boxes to be able to claim the personal tax-free allowance. Once you know that you do qualify for that, that's obviously the first very, very important step. Then what you can do, you can go to our advanced income tax calculator. So I'm just going to go into the last example because I think this is still, there's nothing completed in here. So what we're going to do here, we're going to say you're a tax resident. Let's look at this example first. So you're a UK tax resident and you've got rental income of £30,000. And let's say you've got repairs and maintenance of £5,000, which is going to give you £25,000 profit. If you've got a mortgage and you put in here at the bottom the residency property finance cost, so interest incurred on your mortgage. So remember, £25,000 profit excluding the finance cost. The reason why you do it, in the UK you are getting taxed on this amount first, and then they will give you relief on the finance cost incurred. So let me show you how the calculation works. So on the right, as soon as with that income, remember we're looking at a UK tax resident now, it takes that profit, 25,000, and it will deduct the 12,570. Once it knows that, it will actually calculate your tax due, which is pretty much 20% of that amount. And if you scroll down, you'll see reliefs. It will give you relief for finance costs. So it gives you 20% on the £10,000 finance cost, 20% relief. If you add all of that up, it's going to show you that your tax bill is £486. In this case, if you claim the personal tax-free allowance. So let's say you are a non-UK tax resident and you want to claim the personal tax-free allowance, your calculation is going to look exactly the same. If you are a non-resident and you do not want to claim the personal tax-free allowance, then you'll see your income stays 25,000. It does not deduct the 12,570, so it stays 25,000, and your tax is no more. Previous calculation was 486. Now it's £3,000. If you're not sure about your tax residency, we do have a very basic test that we've pulled in here. But if you've moved around between the countries a lot, it can get very, very complicated, and there's tie tests and all sorts of things. So I highly recommend that you speak to a professional. If you need help, you can just always click on services at the top and connect with one of our accountants. Right, so to get back to this calculation. So remember the first calculation claiming personal tax-free allowance was £486 tax due. Now it's £3,000. Now, it's important to understand why you would not claim the personal tax-free allowance in the UK. And this is, I'm going to try and explain this. Firstly, what your UK tax return. Here's the two options that we just looked at. So this is claiming the tax-free allowance. That's your income, repairs and maintenance profit, less the 12,570, less the finance cost, gives you a tax bill of £486. And in this example, we did not claim the personal tax-free allowance, the tax bill was £3,000. Right. Sorry, let me just move my precious face here. Right, so now I just want to show you an example. This is not, you need to go and look at your local tax rules in the country that you are a tax resident. And this is what generally your tax return will look like in that country. Okay, so in this example, everything is US dollars now, let's say, yeah. And you earn a salary of 100,000 US dollars. You've got interest income of 5,000. Then you've got to go and add your foreign rental income in that country of rental income, repairs, and you need to apply the local tax rules. So maybe you can deduct the finance cost there. So if you add all of this up in that country, your total income is 120,000. So then you've got to work the tax due on that total amount. Let's say it's 40,000 US dollars. Right. I know I converted this straight from pounds. You should converting the rental income you received in pounds into US dollars to include it in that tax return. But just so that for ease to reference back to the numbers, I've kept it the same amount. So let's say your tax is due 40,000. What will then happen is depending on the double taxation agreement with that country, if you are allowed, you get a full tax credit for the amount that you paid in the UK. So if you claim the tax-free allowance in the UK, you only paid £486. You'll get a credit for that, converted to US dollars, but now just let's assume same amount, 486 credit, which means you will need to pay tax in that country of 39,514. If you take the second option, you'll have a tax bill, same calculation, tax bill of 40,000 US dollars, but you'll get a credit now of 3,000. So in option one, you pay less in the UK, but you can claim a lesser credit in your local return if the double taxation agreements allow. Second one, you paid more in the UK and you can claim more in your local tax return. So, and if you add that plus that, it gets to about 40,000. If you add that plus that, it gets to about 40,000. So it really depends on what your local tax rate is. It really depends on a lot of things, what will be the best option to claim it, yes or no, the personal tax-free allowance. Definitely need to go and look for advice. So you may have picked up from my lovely accent that I'm South African. So we do have an office in South Africa. So we can help clients based in South Africa who's renting out buy-to-let properties in the UK. But other countries, you need to go and speak to a local tax advisor to really understand and check what will be the best option for you. Again, as I mentioned earlier, if you need help to understand any of this on the UK tax return, like I say, we can help with the South African side as well. You can just click on services and you can connect with one of our accountants and we'll happily answer all your questions that you may have. I really hope that was useful. Thank you so much for listening. Thank you.